On our radar today is Maxis, which reported its second quarter earnings last week. JF Apex upgraded the telco from hold to buy, though it kept its target price at RM4.76. Maxis closed at RM4.28 yesterday. To recap, Maxis saw its latest quarterly earnings rise 5.3% year-on-year to RM360 million, as revenue rose also by 5.3% to RM2.26 billion. The higher top line was led by postpaid, which maintained its subscriber growth momentum, though ARPU was slightly lower at RM81 versus RM82 in the first quarter of FY21. It booked a normalized EBITDA margin of 50.9% versus 49.2% in the first quarter, with EBITDA at RM1 billion, up 6.1% year-on-year. Gearing is stable, with net debt to EBITDA slightly lower at 2.35 times versus 2.43 times in the first quarter, as operating free cash flow increased 34% quarter-on-quarter to RM894 million. JF Apex says Maxis' results came in within expectations. The telco's first half net profit of RM694 million accounted for 48% of its full-year forecast, while the RM4.49 billion revenue made up 49% of its estimate. It is keeping its earnings forecast for this fiscal year, saying Maxis has remained cautious on the COVID-19 situation and has not guided on FY21 earnings. The research house is expecting a full-year dividend of 16 cents from Maxis, which translates into a yield of 3.8%. Although the stock is now a buy in its books, it says it's keeping its target price unchanged due to the recent sell-down in share price. Major risks for the stock include a new price war, higher than expected capex investment, and change in regulatory risk. So what's the consensus? According to Bursa Marketplace, there are 4 buys, 13 holds and 4 sells. Average target price RM4.83. The stock closed at RM4.28, so that's a potential upside of almost 13%.